Hello guys and welcome back to another trade review. Today I'm going to review one of my latest trades on BPMX. Um, so if we get right into the trade and the background story of this trade, BPMX, just like stocks like Acre, is somewhat of a bad sushi short that have gained some volume and then found somewhat of a recent resistance area and then just broke out. As you can see, and as you know, if you have watched my video, I traded this on the 27th. So this BPMX is a very similar trade. It's the same kind of idea, and it's all about it's I think since these like bad sushi shorts and this recent volume increase and the breakout has worked out so good. It's just about developing and not developing but reacting to the market environment. If bad sushi shorts works out, then that's what I'm going to play. It's simply just to listen to the market and take the meat of the move that it prevents by these volatile stocks. So if you get in right to the intraday chart, and as you can see, it's not original arrows. The original picture of my exact entries and exits are here, and I get into the chat notification up here as well. But why I do this is so that I can show you more exact and draw outlines and etc. But before I get right into it, there's one main lesson right off the bat, and that is to make sure that you know of your weaknesses so that you can develop them. I found out a weakness lately, and that is that I'm simply not good of buying the front side of a move. As you can see, I made many trades here, way too many, and where I saw that I ended up chasing, I sold. I rebought on a dip, sold because I got impatient. I didn't know where the shot was going to go. It simply, for me, I have too little information in form of chart movement to decide my risk levels and to have a nice plan. And as you can see, I am doing the same mistakes, and I did it on Acre as well. As you can see, this is the front side of the move. I bought, and then apparently I wasn't because I was risking off this level, but apparently I wasn't too sure about it. So and I ended up selling like right at the bottom before it bounced up. But as you can see, I noticed this mistake and got into the trade earlier. But that's reviewed in my video on Acres. So if we get into the BPMX, the first lesson right off the bat, as I told you, is focus on getting around your weaknesses. So one of my weaknesses, and noticing them, one of my weaknesses is truly that I'm not good of buying front side of a move. So that's something that I'm going to work on, simply just avoiding the action until 12 o'clock or 11 o'clock to see how it plays out and where it ideally bottoms out, or what level it tests before going up again. And it's not to say that I'm going to avoid trading in the morning at all. I'm still going to trade like EMLF as I traded today. Is also a video up on that, which is a try of a morning panic play where I try to catch the bounce. So there's still opportunities in the mornings, but you have to figure out what you're good and what you're bad at. So understand that it's still practice mode. It's still practice mode for me, and if you're new, it should be for you as well. This is one of the biggest reasons why I use paper trades, because I want to get not the statistical edge, but I want to, as you can see, I have an Excel file, so this is where I review all of my trades by statistics. I write them like what is the pattern, what's my dollar profit or loss, etc., etc. I want to do this so that I can see what patterns that I'm best at, and in the patterns as well as to BPMX, see if I'm good at buying front side of the move or second on or late of the move, to see where I'm good at. So BPMX first lesson, find your weaknesses, work on them so that you can go around them. And something that I did good actually on this trade was that I stayed patient. I bought, and then to stay patient, I sold up here. As I have the mentality of when I think the stock is getting overextended, when there's a lot of green candles in a row. I usually use the 5-minute candles as well on the sidelines, to see how overextended it gets. So my sell-off was simply in here. So 2 big green candles it's not way too overextended, but 3 green candles that's definitely when you need to figure out if you're going to sell or not. But what made me to think of selling was that it was up a lot, or not a lot, but I thought it was up quite much, and that it prevented 4 or even 5 green candles in a row. So that made me sell some, and I'm very glad that I did. I also sold the rest of it because I thought, okay, I think I'm getting greedy here. And as well on, if we look at the yearly chart, there is some overhead resistance right at 35. And as I was talking on before, on the notification that was simulated on the picture right here, where it said chat, was that someone brought up in chat that there was a lot of warrants at 0.35, which is the area where it topped out right here, that could be exercised. And so I think that's the main reason why it topped out right here. So when I heard that, I'm like, hell no, I don't want to stay in this, because I saw that 0.35 was heavily like heavy on the ask. So I got off the rest of my shares, and it ended up closing at 0.35 and even got up to 36 pre-market. But as you can see today, it had a massive panic. So I'm very glad I didn't hold it overnight. So simply, the main lessons on this is to know your weaknesses and work to get around them. So that's the main lesson, and focus on the place that the market is preventing you with, and that the market is appreciating. So if it's bad sushi charts like BPMX and Acre, play them. Just make sure that you're on the safe side. As this trade, I only took simply 8% or something. But I rather have the mentality of better safe than sorry. And as Tim always says, it's about hitting singles, not home runs. So I think that's all. Thank you for watching. Hopefully you learned something.